to the stock market morning prep video for Wednesday, September 24th. Red again. Dow Jones down 116 points, Nasdaq down 19, S&P 11, and the Russell down 10. And as we mentioned early in the week, and I think last week we also mentioned that watch the Russell, because the Russell is going to pretty much dictate and really kind of push where the next trend is going, at least in the short term. And sure enough, we have 3 days worth of selling. We're not really at washout stages as of yet, and really what stinks is that every time the last couple of days we've opened down at least 9 or 10 handles in the S&P, and that's a really tough way to day trade it when you're down so much. And S&P ends up closing 11.5. That's only about 2.5 points different from the opening, so really didn't do too much. Despite you see the Dow Jones down 116 points, but we did get some selling, and that's what we're looking for some continued selling. We picked out a pattern, a nice bearish pattern, which I'll show you in the ES. But I'm paying attention to a couple of the indicators because, I want to see a big washout here before we look to enter the market or do any kind of long counter trend trade for the moment. Okay, so we are coming into some seasonal weakness, as we all know. And I'm watching this McClellan oscillator. We're getting close, down 71. If it were to open down again today, we'd probably be down here in that 85 percentile. It doesn't look like it at the moment. We're up about 3 handles in the E-mini electronic session. So let's just keep an eye on things. The other one is, of course, the NYUD. Advanced decline with volume. And as you can see here, we're not quite there at that washout stage. As you can see, every time we get down to these areas, we kind of bounce, and that's what's been happening here all the way, pretty much all of 2014, 13 and 14, excuse me. So let's keep an eye on those two indicators, and of course I'll be watching the other indicators to make a better view of which way this market is headed. Now, back in August, I had shown you this inverted head and shoulders, which is a bullish pattern and measured to around 2,000. And we absolutely got there. If you can see this, you see we got up to the 2,000 mark, and then we went sideways for about 10, 12 trading days into September. And now what I found is a head and shoulders pattern, which is a bearish formation and coincides nicely with being at all-time highs. We have our head here, we have our left shoulder, and we have our right shoulder with our neckline nicely positioned at right around 1968. Measures 46 points down to 1922. Does it get there? No one knows, but it does look like we are starting to form this beautiful bearish pattern. If it works like the inverted head and shoulders, we should be down to that 1922. Now, the thing is, and I want to make point, is that it's not it's a very I think it's a harder pattern to trade. Why? Because when you establish the head, the left shoulder, right shoulder, you've already now have come down pretty much 2014, 1970. That's a decent move in just 2 or 3 days. So what happens is we usually get some sort of a bounce, long as it doesn't take that right shoulder out. If it gets back above 1997, then I would probably say all bets are off, at least for now, on this head and shoulders pattern. But it is valid. I like the pattern here. Usually how I like to trade them is I like them breaking and flagging, bear flagging into the neckline, and then establish a short position. That's just extra confirmation. Or you can short up into this area here where we have these moving averages as well as the right shoulder, and then fail. And then you can start a position here and then add to your position here if you were to swing trade it. So I do like the head and shoulders pattern and the inverted head and shoulders pattern. They actually were positioned perfectly, because the head and shoulders pattern sometimes you find in the middle of a move and then starting to roll. I like them when they're at these tops, and inverted head and shoulders when they're at market bottoms here, like we had way back here. So let's keep an eye on this pattern. It's actually pretty good, pretty valid pattern, and of course I'll have alerts during the day, and we'll see if this thing develops. Now let's take a look at the diamonds, and as you can see here, we did have this double top. We broke through, and now we're back down below. We're testing 34 EMA on a daily chart, and we do have some significant volume here. Now again, 3 days down, Do you want to short 3 days down? No, not necessarily. We want to get a little bit of a pop, make a lower high from this previous high, and then you could look to establish shorts. And I think when that does happen, you don't hear me calling, oh, we have a local top in place, we have a short-term top. The reason why is I want to see if the dip buyers are going to buy here. If they start to buy and they push them, but they just can't get them to highs, and we make that higher low, then if we somewhere right in this area here and then start to roll with along the other indices, then I think that pretty much safe to say we have a local top in place. Here's the transports. As you can see, transports here very, very weak at the moment. And remember, made new high, sold off. The repetitive pattern in the transports holds pretty much true. And sure enough, we hit new highs and then we sold off again. So let's see if this does have some legs. Obviously, the first target would be this uptrend channel, and then of course this low here, which held pretty much this low. So if you recall, back in early August, I mentioned watch that when we started breaking down, this will be the spot. And sure enough, now we're breaking down yet again. So the 50 days right in here, and after that 50 days lost, then of course we're going to really shoot down and probably test this low again. So transport's also weak. This is our leader. And then let's take a look at the IWM, which is the main culprit here, guys. This is the main culprit. Lower high from this previous high. Okay, we set up some flags. Yes, we did break the downtrend. We had a short-term top, and sure enough, that 61.8%, okay, from this high to low, and then this high to low was a 1272. Nice little cluster in here, and sure enough, that held. And we started to roll. We tried to get out of this little flag. We did not. And we failed miserably. Now we had a bear flag, and you can see what happened here on Friday. We had a bad inverted, reversal candle, engulfing red candle, and we took out 3 days in one day, and that was on Friday. And then, of course, Monday and Tuesday, and we have now broken below the 200-day moving average. So this index is in trouble, and I think, like I mentioned the last several times in this video and previous videos, this is the culprit that's going to take down the market. And sure enough, it's been doing so. Now, does it go straight down and blows right through this little low? Probably not. I do think that maybe you may get a little bit of weakness and then a decent rally, a short covering rally. But if it's going to sell off and it's going to continue to sell off, I would suspect that it wouldn't get too far above this area here where all the moving averages are. You might get a little bit of reprieve and then sell off again. Okay, and if that does happen, then I think you're going to have a local top in place, and all the indices are going to follow suit. And then lastly, here we have the Qs. The Qs have been holding up rather well, but in this index, you have the high beta names, the Teslas and the LinkedIn's, and these are the stocks, the high beta names that have been actually moving higher with the market are now starting to sell off pretty hard here. Okay, the reason why it's holding up well is because Apple did well yesterday, so that's why you're not seeing the weakness that you're seeing in the other indices that I just showed you. So just keep in mind. Let's see what happens here the next couple of days. It should be interesting. I like to see a bounce here now. We had 3 days of weakness, so I'd like to see a little bit of a bounce, see where we go from here, and if we do get that bounce, and that bounce is weak and fails and makes that lower high, then I would be looking aggressively to short any weak stocks, especially during the course of the trading day. Have a great day, everybody, and we shall speak to you tomorrow. Take care.